Welcome to another episode of the Lightspeed Investing Podcast. I've got Mr. Stephen or Big Beats back again. He is here to share with us the last 10 rules of his trading principles. Stephen, how are you doing today?
I'm good, Philip. How are you, man?
I'm great. Staying busy as always. And I think the last time we spoke, you were about to go off to Chicago to hang around the SIBO and the CME. How was that trip, man?
Oh, I had a great time. I did a couple of interviews there and being on the floor of the SIBO itself. The Spy Pit was exciting again. I love going over to the VIX Pit, which is next door. And then of course I went over to CME. I absolutely love Chicago when it comes to the markets. I've been doing it for about over 30 plus years in the markets, and that's where I started. So it was nice to go back to see that.
Did you have some chances to also visit Chicago itself as well, outside of the markets?
I mean, I think I ate my way through the pizza
Love it,
through Chicago. So most definitely, most definitely.
love it, love it. So, what do you got for us today? I think we're going to start off here with always have powder. What does that mean to those
Yeah,
listening?
it's my last 10 rules, and you're absolutely right. I think the first rule in this one is always have powder. And I
Mhm.
mean, when the market is moving and the volatility is hitting, and you don't have any cash or no way to buy or invest, you're kind of sitting on the sidelines. So you always, when you're looking at investments, always keep a little bit of a pile of cash to the side so that you can be able to invest at any point, because you never know when things are going to happen. And as you make profit, take it off and put it in a little area. You go, okay, you know what? When the market moves again, I'm ready to go. And when you're ready to go, you'll have something. But if the market's moving and you're already invested, it's going against you, you're kind of messed up. So you can't double down, you can't leverage up if you need to, whatever it is, because you have no cash. So the rule here is always have powder.
And this is liquid cash, right? This is not credit. This is not, right? This is
That's right.
cash, liquidity in the bank. And so, in terms of, because everyone's financial situation is different, right? So, in terms of gauging this, would you say a specific amount or more so a percentage of your overall capability or portfolio?
Yeah, you're totally right. 5 to 10% of your portfolio always should have a position where you either have cash or money market, so you can actually invest or buy or help yourself out in any kind of situation that arises while you're trading.
Okay, love it. Now, I'm just kind of curious, why 5 to 10 as opposed to say 20 or 25? Why that number?
Yeah, because quite frankly, you should be invested. That's the whole point, right? If whether you're long or short, you should already be invested. But the market can move against you between 5 and 10% in a day, and you don't ever want to be in that position, right? Right now, you can see the markets. You're seeing the markets moving about 1 to 2% a day, in an up or down position, right? And you want to be able to make those moves as they go along. But we should be always be invested, whether we are short or long. But we just need to have a little bit of cash on the sideline, just put away, just in case things go your way better or against you, so you can protect yourself a little bit. But always 5 to 10%. And for me personally, it's right around 8% is what I keep in cash. Just because I may throw some cash at a lottery ticket, shall we say, every once in a while. But yeah.
And when you do that, when you allocate your powder, do you like to go all in and like let's say you put 8% aside, you're putting in all eight, or are you diversifying that eight as well?
You're diversifying that 8% too, right? So let's say, for example, when Nvidia fell from about 130 to about $92 overnight, right? I
Mhm.
remember that not too long ago. I was long Nvidia, not heavily, but then guess what? I had powder, so I was able to lever down. And when it came back, then I was able to get back out. But if I didn't have any powder, I would literally be stuck at the position of where I was in that stock. Not too long ago, I was in the bond market. The bond market slipped a bit, and I ended up buying more contracts. I bought the Septembers. So that made it a lot easier for me when I was buying it. And when I looked at that position, I also went a little farther out when I was buying December contracts too. So that's what you always want to make sure is when you always have powder. So as you're also rolling your positions, you're also rolling your cash positions too. So make sure you have a little bit set aside so you're always able to protect yourself.
Love it, love it, love it. And so that brings us to the second rule, right? Which is the whole world matters, right? Which sounds kind of philosophical if we just put that statement by itself. What does that mean in terms of trading?
Yeah, it's very simple. When I say the whole world matters, it means two things. It means the first thing is whatever happens in another country or whatever happens in another, let's say in this market or that market, it affects other markets. So let's say, for example, if you are looking at housing and housing is pushing up and your real estate prices are going up on your home, guess what? So is copper, because copper goes in your house. So all the things that happen, but guess what? Copper is actually mined in 5 different countries, right? If you're looking at gold, you need to think about India and Russia. Are they buying? So when I would say the whole world matters, you need to be picking that newspaper up. You need to be reading the internet. You need to be going to these sites and going, okay, I need to understand what it is that I'm investing in, because everything affects it. Whether just the other day we saw New Zealand dropping their rates. Well, what does that affect us? 25 basis points in New Zealand. Well, guess what? Other countries will start to follow suit. If one country starts to lower their rates, guess what? The United States is probably not far behind, and we're seeing that now. So you're going to get a little bit of an idea and a head start on what's going on here. As my dad always says, if the world has the cold, the United States has the sniffles, right? So we want to make sure that whenever we are looking at our own positions, how are we affected? A good example of that would be computer chips, right? How is it affected in Taiwan? Are they making more? In Vietnam, are they making more furniture? How does that affect my prices, and how does that affect how I invest? And so I keep a very keen eye on Twitter, and I keep a very close eye on government news and things of that nature, so that I understand how it's affecting my positions.
Yeah, and so really what you're getting at here is the importance of interrelatability between markets, right? Specifically within the realm of fundamental analysis, right?
Correct.
Absolutely. So you just wanted to make sure I point that out, because there are two different disciplines when it comes to trading. You have the fundamental analysis, which means you should pay attention to global economic trends, right, and how the world is related. But then, of course, you also have the technical analysis, which means that pretty much everything you need to be successful, right, is in how you diagnose the charts in front of you, if you know how to be a great technical analysis expert, right? So
That's exactly right.
yep, just wanted to make sure that the audience here knows that there are these two modalities, and Stephen here is referring to the intricacies of fundamental analysis. Now, the market never sleeps, but you should. You want to talk about that a little bit?
Yeah, I'm old enough to remember when the market didn't go 24/7, and then I remember when in the futures markets when Globex came around, we were all nervous, like, gosh, how are we ever going to be able to live, because we we need to sleep. But I'll tell you, as a human, we are not perfect. We do have our limits, and I know that people need to sleep. And a lot of times, for me on Sunday nights, I am literally reading a book, and I'm in bed and I am watching the markets. I'm looking at the Chinese market at 4 o'clock in the morning. But I need to get sleep. I need to be able to be prepared. If you're out there and you're like a New Yorker and you're partying like a rock star every night, it's not going to work out for you. At some point, it's going to catch up to you, right? And so so I always say is make sure you take care of your health as you're going along, because quite frankly, it does affect your trading. For me, I have a routine, and when I come into my office, I have music that I'm listening to, and I try to get ready for the day. I'm reading all the reports going on. I'm looking at my technical charts. I'm looking at, as I said, the whole world matters, right? I want to make sure the news, that I understand what's going on around the world. And I can't do that if I'm tired or I'm exhausted and I'm not able to focus and my mind's not right. I think 90% of trading is a mindset. It's not your knowledge, because once you get the knowledge and you understand how the markets work, and you're not performing at a full boat, and you're not ready to go in the mornings, and you're exhausted, it's not going to work out. You're going to make mistakes, mental mistakes. You're going to make mistakes. Oh, you know what? I made one the other day. I was very tired, Philip, and I was getting ready to buy. Actually, I was ready to buy some bonds, and I missed the submit button to buy, and that was affecting me because I was tired from the night before, because I was working on my project. And so that's what I always say, and that's a rule. So I always say, get some sleep out there, and that's one of the biggest things.
And what about exercise, in terms of, because your hours, right? Like I know talking to you, early bird gets the worm, right? So do you have a routine where you may be incorporating exercise or working out more so mid to late afternoon when the markets close? Like how do you like to go about this?
Gosh, I feel like a lot like Warren Buffett, a Diet Coke and an ice cream cone, right? He loves McDonald's in the afternoon. Look,
Uh,
I get it. It's not easy to be able to go to the gym and do the markets. It's really not easy. But I always tell people the same thing. I have a good routine. I have around 10:30, 11. I take my dog for a walk. I clear my mind again after the morning trades. I get right back into it. My phone's in my hand. Don't get me wrong, but I also make sure that I take a walk and make
yeah.
sure I clear my head, because not only does that exercise help your body, but it also exercises your mind. I think that's extremely important when you're actually in the markets. That, sometimes you're watching a trade too much, or where our eyes are focused on that chart so clearly that sometimes you get a wrong picture. So I always say, step aside a little bit, understand the markets, go back into it, and you'll understand. I think a lot of times people look at the trades and they go, okay, you know what? This is going the wrong way. I'm getting out, right? But their thesis hasn't changed. So when I say the whole world matters and all the theses have a thesis, it all kind of comes together, right? Has your thesis changed? Nope. Is it just because you're tired? Is it just because you're not thinking clearly at that moment? Step away from it. Step back into it in a few minutes. You'll get right back into it. You'll be fine.
So for you, obviously you love this, right? Like we can just tell by your passion, your enthusiasm, and how much time you devote to it. How much time are you investing in the markets, day in and day out? Would you say like 5 hours, 8 hours, 10 hours? Just in regards to like everything, like the research that goes up to it.
I would say when it comes to Monday through Friday alone, I would say probably somewhere around 12 hours a day. I would say during the weekends, probably 3 to 4. Look, you can't be a part of this market by just studying it for 1 or 2 hours a day. There's just way too much going on. And listen, I've been doing this for 33 years. And the best part about the markets always is there's something new all the time, right? There's always something new in the markets, always a new news piece, or the world is changing and fundamentals have changed and the technical analysis has changed and the highs and the lows. We're seeing that breaking down how in Bitcoin, right? Because we need to stay ahead of that. If you ever step out of that game and you start to slow down a bit, it's going to catch up to you, right? Because you're going to miss something. I always say the same thing, Philip. The more you know, kind of like the NBC statement, the more you know, the more informed you're going to be in making a decision. You can't come out this market going, okay, I think I'm just going to put 30 minutes in the morning and 9:30 and 10, and that's all I'm going to trade. I've seen those things where people say I only trade between 9:30 and 10 and 3:30 to 4. Okay, that's great. It works for you. But that's not how it really works, right? The truth of the matter is you really need to be understanding every piece of the market. A good example of that would be retail sales coming out not too long ago. And you knew dang well when the retail sales were up, you knew that Walmart was going to do well because that's retail sales, right? That's not something you're going to learn it in 30 minutes in the morning and 30 minutes at night. You got to understand those market cycles. Why were bigger investors buying Alibaba over the last 3 months? Why are investors now getting into other stocks? Why was Warren Buffett selling more of his Apple stock, right? Because he knows he's spinning it. And the differences between him and everybody else is he's got thousands of analysts looking over and poring over data. We don't have that, right? And that's why I built the Quasar Markets, by the way. But the truth of the matter is that's exactly what we need to be doing. We need to be spending as much time as we can in the market so that we understand it. It's a full-time job for most people.
Gotcha. Were you always like this, by the way, or did you evolve to this, in terms of the obsession, right, and the dedication that you have now?
Yeah, I've always been this way. I really totally enjoy the markets. There's a lot to understand in the markets, and I've been doing it so long, and people go, "Well, you have such a wide knowledge of the markets and how things work," and I go, "That's right." But I didn't get it overnight either. It's not just something you do and you learn for 3 months and you're a master of the markets. I see that all the time on YouTube. I'm a master of the markets. I've been in the markets 3 months. What? You don't know anything about the markets, and that's what bothers me a lot. And so I think a lot of times companies like yourselves that get involved and understand it and create those ways of trading that others don't really understand, that's very, very important to a bigger trader,
Yeah.
so that as they grow into their trading and how they trade, they need to be sometimes handheld. And I love that fact. I think this is a world of professionals, but sometimes we don't always want to listen to the talking heads, and I'm okay with that too. I don't always like to listen to talking heads myself, but you also want to make sure that you understand what you're investing in. So
Mm. Yeah. So for you, thank you so much for that, insight. In your 33 years of journey, right? You say it didn't happen overnight. When did you feel like it really clicked for you though? Like at the
it
10
really
years,
clicks for
15, 20 year mark?
I will tell you, Philip, and I think the next one coming up is admit mistakes. It rolls
Yeah.
right into it.
Yeah.
Look, I have made my fair share of mistakes, and that's the next rule is admit mistakes. And bringing that right into it, you're absolutely right. Look, I believe I remember my first start in futures. I lost $10,000 in less than a few minutes, and it hurt because back then $10,000 was a lot of money. And
How many
I'll tell you,
contracts were back then?
I think it was like 10 contracts in the in the
Okay.
in the
Yeah.
bean
Yeah.
pit, yeah. And so it's very heavy, I thought at the time, but I knew what I was doing. And I thought I knew everything and I didn't. And I'd only been trading for about 5 months and I wiped me out that time. It was rough. I had to admit it. And at that time, we had paper trades. I put the paper actually up on the wall to remind myself, admitting that mistake. But then after I started to calm down and listen to the markets and listen to the mentors that were around me and paying attention and understanding the world around me, I began to understand the copper market a lot better. And then I understood the bond market a lot better. And as
Mhm.
I began to learn that, and when I saw the interactions, Japan was interacting and China was interacting, and all of a sudden I understood their positions. I understood the Fed when the Fed was talking, how it would move the markets. It started to click into my head when about 1993, 94, at the time I was working in the White House. I'll tell you, that's when things started to click because I understood how their decisions affected the markets. And it was like, ooh, okay, now I understand why that bond market moved. I know why the DEES bond moved more than, let's say, the October bond. So it started to click into my head probably at about 3 or 4 years.
Love it. 3 or 4 years, it started collecting.
Yeah,
But in
three or
terms
four
of
years.
yeah,
Right.
but in terms of like being a master, how long do you think it actually did that come to fruition?
I will tell you right now, there's no such thing as a master of the markets because,
Wow,
quite frankly, we never stop learning.
love
And
it,
every
love it.
time the market changes. So anybody says, I'm the master and the wizard, I'm the whatever of the markets, turn your head immediately, run away from them almost immediately. Look, there
Mm.
are some really good traders out there, the people that really know the markets and understand the markets. And I listen to them. I understand because I want to learn from them. I glean from them. I try to emulate them, meaning
Mhm.
I want to learn their trading styles and understand how, because every trading style is different. I know that. We all should know that. But what you need to understand is when you're looking at the markets, you need to say, okay, I know what the things around the markets are doing, meaning the Fed is thinking about lowering rates. So all of the things that interact with lowering rates, housing market should push up, right? It'd be cheaper to borrow. Should hurt the banks a bit because not people don't want to leave the money in the bank because they're not making it. Okay, I'm trying to create a thesis around that. Now I'm going to go back and I'm going to listen to all the people that I believe that are my mentors that I understand, or people that have large followings that understand the markets. I'm going to listen to them and say, okay, you know what? I know that in the past, they've done very well when the markets have a downturn. And this is what they did. Because if you're using the same trading style today as you did 3 months ago, you're not doing the market right. You're totally out of whack because the market changes, the volatility changes, the volume changes, the news changes, the technical analysis changed. A good example of that would be CrowdStrike not too long ago. We saw massive news about the CrowdStrike and what we thought the world was going to. We needed more security in stocks and needed more security in our websites and stuff like that. But as we saw the market go up, all of a sudden a bad news piece come out and they get hit, wham. But then all of a sudden it created a gap. And all of a sudden, we no longer worried about the news pushing this CrowdStrike down. Now we've created a technical gap. So now we know that the market's going to change on us. Okay, I need to get out of the fundamentals of CrowdStrike. Now I need to think about, okay, you know what? There's a gap there. I think the stock's going to push back up, back into that gap. And we know gaps get filled. right? And as when stock goes up, that's my thesis, and I bought CrowdStrike. We've done quite well over the last few months, so a few weeks. So I'll tell you, that's what I mean by changing course. Sometimes it's a technical analysis, sometimes it's news, sometimes it's fundamental. But I will give you another rule that's a bonus here. I will tell you that news always trumps technical analysis, right? You may have the best technical analysis, the best screens, the best charts, the best lines on your screen, and some news piece comes out, all of a sudden it throws your lines all out of whack and you got to redo them. So that is a good piece right there.
Love that. But where are you getting the news, right? That's probably important. So who to listen to and who to not listen to, just to hear from you, the trusted sources that you pay attention.
Yeah, I think when I hear about, well, Steve, you have 5,700 Twitter feeds coming into you in in real time, and I do. I have a tweet deck in front of me, and I've created my own tweet deck within Quasar Markets.
Uh-huh.
I'll tell you that. Look, it's very simple. I want raw, hard data. I wanted the data that comes out of the government, jobs or numbers, and I want definitely data from CNBC and Schwab and Yahoo Finance, the major players, yes. But when you dip down in a little bit different into just get right under the surface, the people like Jay Woods and the chartered market technicians like CMT Association and Tyler Wood. When you're looking for technical analysis, my gosh, those guys are the ones who actually invented it. When you're looking at the news cycles, you want to make sure that you're getting real data and not from right wing or left wing opinion sites. We don't want that in our trading. We want to push that noise way out of our thesis and our minds, because that just like jumbled in your head, right? And you want to make sure that you see like real strong data, like Bloomberg headlines or Refinitiv from Thomson Reuters. Those are real strong headlines telling you what's going on in the real world, right? You need to have access to that kind of data. And I also think in the news world, you need to make sure that you have really hard like press releases and things of that nature, because companies are telling you what they're working on and what they're doing. A good example of that would be NVIDIA talking about their new Blackwell chipsets, right? I'm glad to know about that now, but why? Because I know they're working on AI and I know what they're working on AI. So not only am I looking at the news, but I'm also looking at the press releases. I'm also looking at what the companies are telling you, and I'm also listening to what the CEOs and the CTOs of those companies are telling you as well. So that's always important as well.
Love it, love it. And which brings us to our next point, right? In terms of being fluid and adaptable in the markets, right? When a trade is over, move on and do not be married to your position.
Yeah, that's a hard one for a lot of people. A good example of that was I talked about earlier, being NVIDIA. Here's NVIDIA even higher than where I sold it. And I always have a problem with that. But I'm not married to my positions. I want to have a thesis. I want to understand my position. I want to understand why I'm in it. But you know what? It's always a good thing taking some profit. And so when you take profit, take it off, right? And that's what I mean by don't be wed to it. I also mean you want to sell things when you have dogs in your portfolio too. You do not want to ever be wed to that position. It's not like I love Krispy Kreme donuts, or I love XYZ company, or I like this and I like NVIDIA chipsets. That's not a reason to invest. That's a reason to be like whatever the product that they're selling, right? But what you want to say is, okay, I know why the price is going to go up. I understand it, or why the price should go down. And I'm going to get in it and I'm going to make a position. And I did a position. Good. I'm in it. I made some profit, or I made some losses. Okay. It sucks. But you don't want to stay in that position forever. Now, if you are looking to invest and you're going to invest long term and you're putting money in it and you're going to put that money away, that is not what I mean. We're talking about trading. We're talking about a position, a swing trade, having a time set for yourself. Okay, you know what? I think in the next 3 months, this stock's going to go up, or I think in seasonality and futures, right? I know that between December and January, that's a great time to invest in copper, right? It's always been that way. And so why? Well, you have your thesis, but I'm not going to keep that copper contract to February, March, and April, and June if it's a year out contract, right? Why? Because I don't want to be wed to it. I don't want to be married to that position. I like what my idea was, but I don't need to keep it forever.
And for you, are you normally holding positions overnight or are you intraday trading? What is the diversification of your approach there?
That's a very good question. It all depends on what's going on in the markets.
Mhm.
A few days ago, as we call it in the futures market, sleeping with the piggies. I have slept with the piggies quite a few times, right? Thinking, okay, you know what? I made a bad position in Nvidia the other day, and I said, you know what? I'm not going to sell out. I'm not going to take this loss. I am going to stick with it, and I believe in this company, and I did, and it turned right back around. I even put more into it, right? I have powder, so I did it. I put more powder into it, and all of
Right.
a sudden the price came back up. I was able to get out of the big hefty profit. Thank you. And I was okay with that. I wasn't wed to the position. I had powder. I learned how to lever it up. And all of a sudden, I go, okay, I did it. But the trade wasn't forever. It was just to make some money and get out. And I think that's part of it, right, too, as well, is you really need to kind of understand the position that you're in so that you're not in it forever, right? You know why you're investing in. Another good reason of that was IBM. I believe in their AI. Their AI is very strong, Watson X. And I stuck with it when it was under 160, 170s. I thought, you know what, this is a stock that should be back to the 190s. And it was. And I stuck with that. But when we got up there, see you later. Thank you for the profit.
So in terms of your average hold time, just to like paint a, concise picture, what would you say that is? That looks, like a hourly time span, minutes time span, or days?
Gosh, Philip, that's a good question. I've gone stocks and futures that I traded in less than a second, a high frequency trading, right? Boom, boom. But I also say that I have stocks and equities and ETFs that I've held for years, right? Then I will continue to hold. But the average, I would say, on a trading position, I would say roughly somewhere around 3 to 6 days.
Gotcha. Gotcha. And so you're doing maybe in that modality swing trading, right? Correct?
Yes.
Right. Love it. Love it.
If you're trading in the daytime, I love it. Especially in the bond market. The bond market can move really quickly sometimes, and it can be slow as molasses. When it's quickly, I can be in and out in less than an hour. Hey, there's my 10 pips. I'm happy in my yen trade here. I'm
Right.
good to go. That's fine by me. But it also depends on the size of your position too. I think it's one of my rules, right? If the position is too big and it's bothering you, and you're too heavy. So
Yeah.
remember, see how all the rules kind of work together. It's what I mean. Like when you're trading, it's not just sticking to one rule or two rules. It's
Yeah.
how the rules all work together.
Right. It's in confluence, right? The principles being all in alignment, in unison, and kind of like the constellation of stars being aligned, right, so to speak. But
Like
that brings us to another great point here, right? When you talk about what's your thesis, right? What's your targets, your entries, your stops. And in this sense, really, you're saying, what are your intentions,
Right.
right? In like any realm or industry in life, to garner success, you got to have intention. So, which is why hope is never a strategy, right, Stephen?
If you know me, I tell people almost every day there's no such thing as hope and luck in the markets. I believe in hope and luck in the world because I think it's part of who we are as a human being. But in the markets, it is a mechanical machine. It is literally nothing more than one person trading another person or an algo, computer to computer. The market does not care about you. It does not say, oh gosh, Philip, I'm sorry you lost your money in the market. It
Right.
doesn't care about you. It doesn't care about me either. It's just a machine. And I tell people all the same, hope is not a strategy. I hope the market goes up. I hope the market goes down because that's what I've invested in. I really hope that the Intel chipsets come out. I really hope there's no such thing. It either does or it doesn't. It is very definitive. There is no gray. It is black and white. You'll see that when you look at sales, we just saw retail sales come out very high, right? We know that the Fed is looking at the labor market. So we just saw jobs claims come in a little lighter. All of a sudden, I hope that jobless claims comes in a lot lighter so the Fed will start to cut rates even more. That's not a strategy. Your strategy needs to be based on the world. It needs to be based on what you're thinking about what seasonality has happened in the past, about where you think the markets are going. That's better. And I tell people, don't hope or don't think of luck. The best person to bet on is yourself, right? When you're looking at that, look at yourself. Think of your gut a lot of times. That's a better indicator of what the market's going to do, way better than betting on a hope and luck strategy. Hope and luck's great for your baseball game, when I'm thinking about my Cardinals, but that's not a strategy when you're investing. It's not
Exactly.
thinking
Yeah.
about when you're looking at in your case, in the futures markets. Let's talk about that. Let's talk about, in the cattle market. I really hope that there's a bad outbreak of XYZ. Some flu goes around and that affects the cattle market and the prices of cattle go up. That doesn't make it's not a good thing, right? You want to make sure that you understand how it's going to affect and how. I look at trends of people eating habits. Are they eating more steak? Guess what? Live cattle. When you look at dairy products, feeder cattle, and you look at, my goodness, again, the whole world matters, right? So I look at that from a perspective of the give and takes, not the hope and luck. I don't even enter my vocabulary when I'm trading.
Right. And which is why, in a way, the way that I kind of describe it is don't hope for nature to go your way, flow with nature. Like if the river is going uphill or downhill, don't hope that it reverses, just go with it. And so, which is why I think a great segue to play the game in front of you, right? If you will see a massive uptrend, why would you sell, right? Or if you're going to sell, you should probably wait until that trend is over because what goes up must come down, right? But in this case, right, being present with the markets.
Yeah, I feel like you're right. I mean, how many adages have we heard over the years, right? The trend is your friend, and I've heard that. I've heard thousands of them, right? But I always tell people the same thing: play the game in front of you, meaning that what happened yesterday is necessarily what's going to happen today, right? We just got to when you're not happy about the markets and your person didn't get elected to presidency, or you didn't get the right amount of money out of that position you wanted to get, the profit, or it doesn't matter. As I always say, the next day is a different day, right? This is what I always say. You need to make sure that you understand that the game does change literally every day. And we may not like the markets. We may not, and I always say all the time, like I said 2 days ago, this is not my market. I'm not in this market. I don't like this volatility, up days, 4 days, 400 points, down 400 points. That's great for volatility, but it's the opposite. Dow was up, Nasdaq's down. Nasdaq's up, Dow's down. Okay, that's not making any sense to me. Guess what? I'm not in that. I have to understand that I got to play the game in front of me. So that right now, that's the game that's in front of me, right? I understand it. Okay, so I'm going to play that game. I'll wait till the Dow comes down and I'll buy the Nasdaq because that's how the market changes. You need to be nimble and you need to understand that it's not about you. You're not doing anything to affect the market unless you're the Warren Buffett and you're buying, billions of contracts. You're not affecting the market. You're with everybody else. You're just playing against everybody else. And to me, the market is not a game. But I call it a game because to make it understandable in my own personal life. So I say, play the game that's in front of you, understand the markets that are in front of you, so that as you understand that market, you'll know how to apply the technical analysis. You'll understand how to apply the fundamentals. Then you'll understand how to understand the news that came out of Japan today, how that affects the markets. And that's what I mean by play the game in front of you.
And you brought up a really good point that I inherently have always, been curious about, which is the market. I feel like it's always denoted as a zero-sum game, right? Which means, for those who don't know, for one to be a winner, on the other side, there must be a loser. Stephen, let's say we were to make world-class trading education publicly accessible, right? And now the percentage of traders who are competent goes up. What happens to that win-loss ratios? Those win-loss ratios. I'm kind of curious your take on that. If
I'll
this
tell
is
you right now,
game, right?
that is an absolute fantastic question, Philip. I'll tell you, there is nothing more important in anything that we do than education. You need to learn and continue learning, never stop learning. As I say in our own company, never stop building, never stop learning, never stop moving the goalposts forward. That's how we become a better person, a better trader, a better mindset, all of it. But education is the key. And I think one of the things that people have to understand is you will never stop learning the markets. I even today, I still learn things in the market every single day. I just learned a couple things today that I didn't know at the markets. I'm learning about the intricacies of a Shoals data, and I really wanted to get deep down the calculus of that. But I missed a piece of that I didn't understand. So I learned a little bit. Right now, I'm applying my knowledge of the Greeks when it comes to trading. Row, how the interest rates are affecting some commodities. I did not know that interest rates really kind of affected the cattle market, and it has lately because the farmers are borrowing money for feed. So that costs, right? And then it's their cost to borrow. So there's a lot of things that I wasn't paying attention to in the markets there that I you know what? I knew that. I got to go back to that and learn it again. So education sometimes isn't always about learning something new, but it's also remembering what you learned and you might have forgotten about in the past. So you never want to stop learning and keeping that mind fresh and strong. And again, you can't do it if you're tired, right? So all these rules again, once again, come back to each other.
No, absolutely. And I guess the main point that I was getting here is, if more and more traders become competent in a zero-sum game, is the market's going to get oversaturated, where your profits are not going to be as strong. Like, I'm just kind of curious how that balance would hang.
No, not at all. I think when I always want to live in a very educated area, right? When I'm in the markets, I want to live in a very educated market. I don't want to live in a dumb market. When I live in a market where I don't understand the other side of that, the people on the other side, why they're buying these I love cryptos, everybody knows, but these coins that make no sense at all, I don't really understand that, right? So I don't play that. I'm not in that. I love Bitcoin, as everybody knows, and Ethereum, but I don't understand a lot of it, and it doesn't make sense, right? If we are educating those investors and educating people that, I think it could push the envelope even higher, and they would invest in bigger things and create wealth, not just create a grocery day for them. What I mean by that is them a few dollars today wins. You're going to lose it in the market tomorrow because you didn't make enough money in it. Oh, look, education is the key, and I always want a very educated an investor.
Love it. Love it. So the next rule here, right, is to always have an exit strategy. Similar to business owners, where they say, even before you really build and grow and scale your business, you should, regardless if you plan on exiting and selling or not, you should have an exit strategy. That way you can really, protect the valuation of your enterprise, and you can really maximize that. So in this case, what are you referring to here?
I mean, you couldn't have answered that any better. That's exactly right. No matter what position you're getting into, buying or selling, or you're shorting, it doesn't matter. You need to understand what your exit strategy is. Today, I had a certain number in my head that I needed to make in order to be happy, and I got that this morning, and I was out, and I was okay with it. I wasn't wed to my position. I made my profit. I knew what my entry was, so I knew what my exit was going to be, and I put my limit order in. I was out. I was happy. Yeah, the price of the stock went on up, and that's fine. And I was reminded again, Steve, you made money. But I had an exit strategy. I understood what my thoughts were. Look, I know that this price of this commodity is very undervalued, and it should go back to this level. That's my exit strategy. Or I know that seasonality, the price usually goes to this area. Great. That's my exit strategy, right? Never ever get into a position. I don't care how fast or slow you're trading. Never get into a position without knowing when you want to get out. If you're just buying it to go long and stay long and you hope to make a bunch of money, it's not going to work. You need to know. And again, we said it earlier, right? And in another episode, you need to understand what you want to make in a year. You need to set those goals. And if you set that goal, you know what your exit strategy is, because if your exit strategy is you need to make $1,000 today, there's your goal of the day. And now you know what your exit strategy is, because, oh, I made $1,000. I'm out. Look, there it is. So the goal oriented and understanding the exit strategy, it all works together.
Right. And I think if you have all those things in place, it then helps you execute your next rule even better, right? Which is never chase,
Oh
but
yeah.
attract, right? You don't have that second part in there, but I kind of wanted to feel that. Like, don't chase, but you attract. Like a lot of similar success principles in life in general. So you want to talk about what you mean there
Yeah.
specifically?
I can't tell you how many times I've seen the markets and people just chase the markets. Oh, they chased Nvidia all the way down there and chased Nvidia all the way back up. Don't chase the markets. Be methodical in your investing. Understand it. Play the game in front of you. Have a thesis. All these things, and you start to see a much better position. You go, oh, you know what? That's a great place to buy. I'm in. And you know what? And I get in. The market goes up. I'm not chasing the market on the way up either. You know, I may put more money in because I'm being methodical about it. I think, yep, I think the price is going to go higher. I'll put a little more into it, or I'm going to lever up a little bit. But I'm not chasing the market. I'm not going to throw money at it, throw money at it, or oh my God, a news piece hit, because you're gonna see a lot of people that were already in that position. That when the price went up, it's going to slam you, right? You don't want to chase that market. You want to put yourself in a much better position in order to make much better decisions. And when you're chasing the market, sometimes you just feel like, gosh, I never win. How does that person know that, before it even happened? To me, I don't care. The market's not for you. It's not against you. Hope is not a position. But when you're looking at it from a position of, hey, I'm thinking about buying this, or I'm thinking about shorting this, you put it in long before the position ever happens or the news piece comes out, because you have a thesis. And when you have a thesis, you say, okay, I think interest rates are going to come down. Banks are going to get hurt. You're short the banks. And then when the banks do fall, you don't want to chase it. You're already in the position. You're already there. You're already ready to go. That way you're not having to fight and continue to push and push and push. That's why I say don't chase.
Which I think leads us to the final point altogether, Stephen.
Yeah, if the market doesn't humble you, you're not playing it. That's exactly right. That is the final piece of resistance, the big beat rule of trading. If the market does not humble you, you definitely aren't playing it. Look, people ask me all the time, should I paper trade? If you don't know how to make the orders, yes. Paper trading does not help you become a better trader, because you will not trade the exact same way as you will when your money is actually in the market. And I'll tell you right now, if you don't lose money in the markets all the time, you're really definitely not playing the market very much, because quite frankly, you're going to lose money, and you need to understand how to lose money and be a good loser. I see it all the time. I can't believe the market went against me. What is everybody's against me? I hate the world. That doesn't matter. You got to be methodical, got to have your mindset ready, and the market's going to humble you. It really is. It's going to make you go, you know what? I'm not the smartest person, and that's okay. You don't have to be the smartest person. You don't even have to be the dumbest person. You can still make money. I see it all the time. I see people who I don't look up to, and I go, wow, how'd that person make all that money? But you know what's going to happen? The next day is a different world. It's great. But you're going to have to understand that wins and losses happen all the time. And you got to understand you can't get upset about it, and you can't bang the table when you're losing. You can't throw your arms in the air. I think when I first started, I think my poor dog heard me scream all the time, the ups and downs. You got to be more centered. Your body, your mind, everything has to be more centered. And so when I say that if the market doesn't humble you, you're not playing it, is because you're probably not in the market heavy enough. You may not be investing enough in the market. And then, as I say, if you put too much in it and the market in that position bothers you, you're way over levered into that position. But you want to be centered, understand, have a more complete picture of yourself as a trader. And as a trader, you keep rules and you keep those mindsets clean and understand the markets. You'll be better than ever.
And I just want to point out, I think what you're saying here when you say you're not as heavily invested in the markets, not in terms of actual dollar signs, but like time, energy, education invested, right? Because, how else are you to turn around a losing streak, right? If you just keep hitting the damn button, you got to look inward, you got to reflect, see what potential mistakes you made, why those mistakes were made, and then make your adjustments.
And admit them. You got to admit another road.
Right.
You're absolutely right, and I think that's one of the cool things I like about Lightspeed investing is that when you're looking at companies that I think are quality, people should go turn to them, right, and say, look, I don't know how to do this. But when they turn to companies like yourselves and go, okay, we know we're going to help you go to the next level, great. And then they go, okay, you know what? I think I got this. I think I understand this. I'm getting a bigger picture. I understand why, and that's a good thing. And I like educated traders,
Right.
but even educated traders lose money too, so that's okay.
Love it. Love it. Well, thanks so much for your time, Stephen. And again, right, your best way to get a hold of you for those listening and to get those updates on the Quasar markets, what would that be?
Yeah, it's very simple. Quasarmarkets.com. We're going live. The new version is coming out. The one I've always wanted to build is coming out in a few days. I look forward to seeing everybody out there. You can hit me up on social media. It's QM Big Beat on Twitter and LinkedIn. Same thing, QM Big Beat. Come see me. Come say hello to me. And definitely. And Philip, I look forward to seeing you.
Absolutely, man. We'll be in touch. Thank you again for your time. And I hope you have a blessed day, Stephen.